Welcome to another S&P 500 analysis. This is the weekly edition. The S&P 500 has not experienced a losing streak of more than 2 days since middle of July of this year. Last week, the S&P 500 was down for 4 consecutive days. And with that, a lot of people on social media are saying the stock market crash has started. In this video, we will look at the price action of the S&P 500, the other major market indexes, the sentiment, and the market internals, along with the 10-year yield, the US dollar, crude oil, and the precious metal, and see if indeed the stock market crash has started. So stay tuned. Let's start looking at this weekly S&P 500 chart. As you can see, last week the range was 77.72, and it lost 78 point or so, or essentially 1.73%. As you can see, I also added another trend line here to connect as many of these pivot low here as possible. That's the reason why, trend line is very subjective. It's depending on where you want to draw it, right? But in regardless, we essentially are looking for the price to break below this pivot low here and possibly come down and test this low. And we'll take a look at the price action in a little bit more detail later on in this analysis. But for now, we essentially are looking at a bearish candle from last week. It is still holding above this trend line here, these trend line that formed this wedge that a lot of market participants are looking at. So we're essentially watching to see will it break down from this wedge, and if it does, then I have another trend line down here that essentially formed this price channel. Not saying that's what it will do, but it just gives another perspective of what the potential downside target could be. So looking at this right now, the price is coming down. As I said in the earlier intro, that the S&P 500 was down 4 consecutive days. So we'll see would it break below this wedge here, and also if it does, then essentially it will break below this 10-week rising moving average. So at this particular time, the closing price is still above this 10-week rising moving average and also this 40-week moving average. So far as the trend is concerned on a weekly basis, it is still in an uptrend, even though we saw 4 consecutive down days from the S&P 500 in the last week. And looking on this daily chart with the sentiment, the market sentiment index here with the VIX and also the put-call ratio, as you can see, there's 4 consecutive down days starting on last Tuesday. And once again, essentially, I got a trend line here connecting these low. We were saying that on one of the earlier video, I was kind of projecting maybe these, maybe September 17, we probably see a low point on this pullback, just based on, the recent time span between each one of these low. And we're saying that probably, this essentially the next Wednesday or so, next Wednesday or Thursday, we probably start seeing a little bit of a beginning of a downtrend. But as you can see, the market never does what I think. It doesn't care what I think, right? So it actually started this Tuesday, last Tuesday, and start pulling down. So right now, we're essentially keeping an eye on to see would it be able to hold above this low here. And this low is somewhere around 43.67. Now, looking at the VIX came up. Remember, I was saying that a lot of time when it came down here to about this 15 level, we tend to see a little bit spike up on the VIX. Well, this time it did not come down to the 15 level. It just kind of hovered around that 16 level. Then all of a sudden we got a little spike up and got above the 20 level. And right now it's sitting at 20.95. And also the put-call ratio did come up a little bit, but it did not enter up into the 0.75 zone there, above that 0.75 level. It closed the week at 0.67. So although it's not completely risk on, but it's also is not completely risk off. So right now, the market participant definitely approaching the market with a little bit more caution. They are feeling less complacent and less bullish, less greedy, because the put-call ratio is up at the 0.67. So as one would expect, with the market pulling back, we expect to see a lot of these internal will turn negative as well. Except the up-down volume ratio on Thursday, we actually got a positive up-down volume ratio. In other words, it is in favor of the up volume. It was 1.3 times more up volume than down volume on Thursday, while it was down. So, but on the other remaining 3 down day, it was negative. But also interesting enough, on Monday, the up-down volume ratio was negative, even though on Monday the S&P 500 was up. And same thing with the advanced decline. On Monday, the advanced decline was also in favor of the decliner. There was 597 more declining issue than advancing issue on Monday, and the up-down volume ratio was 1.6 to 1 in favor of the down volume. So on Friday, we saw a 2.44 or 2.45 to 1 in favor of the down volume, and the decliner outnumbered the advancer by a margin of 906. Although we saw the S&P 500 was down 4 consecutive days last week, but the new high is still over the new low. So we're still seeing 110 new 52-week high on Friday and only 31 new 52-week low. So the new high outnumbered the new low by 79. So as you can see, even on the entire week, it was positive. There were more new 52-week high than 52-week low. Although the number is not that great, it's below 100, but it is still positive. Now, as far as the New York Stock Exchange cumulative AD line, we see it also turning over along with the S&P 500. So that's not a surprise. And also the other thing is, we still need to see a little bit of a divergence here. There is a slight divergence, negative divergence between this peak here. If we take a look at this value, this is 19,504, and the high on here is 19,596. So there's a 92 more higher here than over here. So there's still a slight negative divergence, but right now we're seeing the AD line is coming down as the S&P 500 also coming down. And looking at the NASDAQ 100, as you can see on Monday, NASDAQ 100, on Tuesday, the NASDAQ 100 closed with a new closing high and also put in a new all-time high. But the interesting thing here is the up-down volume ratio was negative in favor of the down volume, and also the decliner outnumbered the advancer by 1,094. So that is not a very strong broad market participation in pushing the NASDAQ 100 to a new closing high and also to a new all-time high. Now on Thursday, it actually was down, but the up-down volume ratio was up, similarly to the New York Stock Exchange, right? But here is actually 2 to 1 in favor of the up volume, and the advancer outnumbered the decliner by 237, although it's not much, but it is positive. But then on Friday, we saw that up-down volume ratio back in favor to the down volume in the ratio of 1.2 to 1. And also the decliner outnumbered the advancer by a margin of 1,351. And for the new 52-week high and 52-week low in the NASDAQ market, the 52-week high still outnumbered the 52-week low for the entire week, although it is getting smaller and smaller. As you can see on Friday, that margin was 33 in favor of the new 52-week high. There were 87 new 52-week high versus 54 new 52-week low on Friday in the NASDAQ market. And here again on the in the NASDAQ market, the NASDAQ cumulative AD line is also rolling over. We're still seeing this massive negative divergence. So until we see this new low on the advanced decline put in by the NASDAQ market, and also maybe a new low on the NASDAQ 100, and that might get it back in sync. But we'll just have to wait and see. Right now, the AD line is rolling over along with the NASDAQ 100. So although we did see a 4 consecutive down day last week, the sentiment, it is getting a little bit fearful, not as complacent as before. And also the other internals, such as the up-down volume ratio and also the advanced decline is rolling over a little bit. But again, it is not to the point that it is instilling massive fear in the market yet. Now let's go and take a look at the price action of the indexes and the treasury and also the precious metal and the crude oil and see what they are telling us. Here we will look at the SPY, the ETF for the S&P 500. Remember the last video I talked about this level here at this 127, and we're essentially saying that if it come back up, then that would be the level to look at and to keep an eye on. And then on the downside, we essentially was looking at this value area high, which is somewhere around 449. We're saying that if it break back inside of this value area, then we essentially will be keeping an eye on this point of control, this composite POC at 442. And in addition to that, we also be looking at a retracement back down to the other side of this value area that would be down at the 436, because the basically a look above and fail sort of play will be in effect, and we essentially are looking for the balance rule to be in play, and that imply that it could retrace back down to the other side of the value area. And that's essentially what we are looking at right now. This right here is actually a relatively bearish type of candle pattern. This is what we call a tweezer top. And if you combine this two candle, you're essentially getting a little bit of a shooting star type of a doji here. And right now it's essentially pulling back. We saw a back test on this 449. And then it fell and proceeded down on Friday to this high volume node here. And looking at the QQQ, the ETF for the NASDAQ 100, remember we're looking at this balance area here. We're saying that if it breaks to the upside, then we're looking at this 1x extension at the 385 area. And if it breaks below, then we're essentially looking at it to come back down to this balance area, and we'll be looking at this 336. So right now it is coming down and tag this 336. We want to see will it come back into this balance area, and if it does, then we're basically looking at this 373 level here and see what it holds. If it doesn't, then we're essentially looking at this balance area here, this value area on this particular swing that could be in play for the balance rule. Right, look above and fail, and then we be looking at this point of control here at 368. And for the Russell 2000 ETF, the IWM, we're basically looking to see would it be able to come back out of this value area once it came back in, and that was the 225 level here. And as you can see that it tried to break back out again on Thursday, but unable to do so and hold it above there. So on Friday and Thursday, we see it move back down, and now it is sitting down at this point of control here, this composite point of control, somewhere around 221, 222. So essentially, we're saying that there could be a play of look above and fail here. So right now, we're essentially looking to see would it get a bounce back up to this value area high and try to break out of it. If it doesn't and it continue to move down, then we essentially are looking for this balance rule to play out and see what it come down to this 214 level on the other side of this balance area. Looking at the daily chart of the S&P 500, last video we were talking about the possibility of this thing come down to this trend line, and essentially will they monitor this 100% here at the 44.79 or 44.80. As you can see, it came down right now, so we're basically looking at this trend line here and see what it come back in. So also the other thing is, if it doesn't get a bounce back out of this, get back above this 44.80, then we're going to remove this Fibonacci extension, and we're going to put in a new one. And essentially, we're going to be using this Fibonacci extension here at this point and down to this low here. So basically looking at the swing. And as you can see on Friday, it actually came down to this 50% level. So if it could get a bounce back up and get above this 618, which is 44.78 level, and then proceed to move back up, then we could see this 45.46 get retested. And remember, we are still looking for a potential new all-time high out of the S&P 500, and we're going to take a look at it, the E-mini S&P 500, to see why we are looking for that possibility. Okay, so basically right now we are still looking for a little bit more downside to see would it be able to hold this trend line for support. As long as it hold above this 38.2 near the 44.36, then we're still good on this Fibonacci retracement. But once it dipped down, then we essentially could be looking at a little bit more of a downside move. If it break this trend line, then we're going to be looking at the next level down at this area here. Okay, so right now we're essentially monitoring this, the 440, the 44.50, right? That's the level that we are still looking at, the 44.50, to see would it be able to hold this. That's essentially in confluence with this trend line here, okay, and see would we get a bounce. And for the Nasdaq 100, we're saying keep an eye on this pullback to this 1618, somewhere around 15,233, and also this 141 at 14,850. So right now we're still continuing to watch these two levels here for potential support. And for the Russell 2000, we've basically been looking at the reclaim of this 2297. As you can see, it did came up and close above it, but wasn't able to hold it, and now it is coming back and dip below this trend line. And now we are keeping an eye on this 2195 level to see would it be able to find support, and if it doesn't, then we're essentially looking for this thing to retrace back down to this lower end of this balance area, 2133. And now looking at the Dow Jones Transportation, remember we were saying that we'd be keeping an eye to see would it be able to reclaim this 15,000 level. And as you can see, it made a little peak up here, but unable to hold it. And right now it's pulling back. So now we're watching for this level of 14,242 to see would it be able to provide any sort of support. And if it doesn't, then we basically move down to the next level, which will be 13,656. And for the Dow Jones Industrial, we're saying that keep an eye on this balance area to see would it be able to pull back in. And if it pull back in, then we essentially again looking for a look above and fail type of move, and we be looking at it to pull back to the other end of this balance area, which would be somewhere around the 33,800 level. So right now we'll continue to watch to see would it be able to get a bounce back and get back above this 35,150, or would it continue to pull back? And if it does, pull back to this 33,800 level. And finally, for the New York Stock Exchange Composite Index, we are looking at the index pulling back into this balance area. So right now, we basically are looking to see going to pull back down to somewhere around this 16,055 area, or would it be able to pop back out and try to move up to this 16,875 and possibly go and put in another new all-time high. But right now it seems like it might continue to pull back and possibly at least get down to this level, somewhere around 16,400 in the short term, and see would it be able to find support. If it's not, then we're essentially looking for this thing to continue to move down to this 16,055 area. Now let's take a look at the 10-year yield. As you can see, the 10-year yield came up last Friday. It was sitting at 1.34, and it seems like it could be breaking out on this ascending triangle here. And if it breaks, then we could be looking at 1.426. That would be the next area to keep an eye on. And if it breaks this trend line, then we'd be looking at a 1.2. But right now, it seems like it could be making a move to the 1.426. And for the US dollar, we see it still kind of bouncing around inside of this zone here between the 92 and 94. Be looking for this thing to come down and break this 92 and possibly come down to this 91.24 level here. in this little bit of a zone area that I have. So we keeping an eye on this 92.11 to see what it break that. But if it continue to move up, then the 94 will be the upside target that I'd be keeping an eye on. And for the crude oil, it's continued to hold at this level near the 70 level. And I foresee that the possibility of it coming back up and possibly retest this 75 area. But if it pull back, then we'll be looking at the 64 and the 61.5 inside of this zone. But right now, if you look at this thing, you could look at it as a little bit of a bull flag, a bull pennant, whatever you want to call it. So keep an eye on this, possibly this 70 level. If it breaks this 70 level, then there's a good chance that it could make its move up toward the 75. Now, looking at the precious metals, starting with the silver, as you can see, silver peak above this 2470 area and it pulled back. And right now, I'm still looking for this thing to come back down and retest this level 22.72. But if it does push out and get above this 2472 and be able to stay above that, then basically looking for the next level up here at 2667. And here on gold, we see gold was trying to make a move here up to the 1846. So essentially try to get up to this trend line. As you can see, we've got a big reversal here. And right now it's back underneath this 1804. Seem to be chopping around in this 1804 for quite a while. So that is a zone to watch. If it break this zone and break it on the downside, then watch this trend line and expecting this to break down this trend line and come back and retest this area here, because this low here, got a little bit of a spike low down here, came back up relatively quickly. So I'm expecting it to see it come back down and see could it find some standing buy order here to push it back up. On this index chart here, we're essentially looking at all the major market indexes, and last week only the NASDAQ 100 and the NASDAQ Composite closed with a new all-time closing high on Tuesday. All the other indexes that did not close with a new all-time high. Now let's take a look at the E-mini SP500 Future, the ES, to see what it is telling us to keep an eye out for. Now right now we are looking at this volume profile, and as you can see on this balance area, it broke from this balance area on Thursday, although it did break down a little bit on Tuesday and then stay down on Wednesday. So I guess right here it's kind of sucked a lot of people in, thinking that we was a look below and fail and try to run it back up. But as you can see later on today, it just broke down, and right now it's sort of setting up a little bit of a trend day, because we have these triple distribution on Thursday and then on Friday, which is basically got a a little bit of a sell-off day, because you see that very thin volume up here and then establish some sort of a value area here before it is sold off into the close here. And now it is trying to find some balance down here, because there was a little bit of a balance area here at this high volume area here. So we'll see, would it be able to come back into this high volume area next week, or it will basically, it might be just coming up and maybe tag this high volume null or something and then continue back down, because there are quite a few naked POC here. For example, over here at 44.35 and a half, somewhere around here, there's a virgin point of control that need to be tagged, and also down here the 43.96. So those are two levels on the volume profile would keep an eye on. And here, looking at the market profile, remember the market profile, I have marked down the all-time high, the Globex all-time high that was printed on September the 3rd, and that was at the level of 4549.50. So that level hasn't been tagged yet, and that level could be the clue to tell us to keep an eye out for a possible S&P 500 new all-time high. Now, the reason why I'm saying possible, although in the recent past, this indicator seems to be very reliable. Every time that it printed a Globex all-time high, it always followed by the E-mini S&P 500 on a regular trading hour, that it will push up and tag that all-time high and put in a legitimate all-time high. So if this time is doing the same as in the past, then we would expect that to put in a new all-time high. And if the E-mini S&P 500 put in a new all-time high, that means the S&P 500 will also put in an all-time high. And that's the clue that we're basically keeping an eye on to see, will it be different this time? Right? In other words, will it fake us out and just leave that Globex all-time high hanging there? Now, if that indeed the case, then maybe a lot of those folks in the social media calling a market crash could be correct. But if this indeed not the case, and it will come up and tag this Globex all-time high, then once again, we'd be just looking at this as a pullback, and we'd be surprised to even see a 5% or a 10% pullback on this time around. Most likely, we probably will see again maybe a 3%, at most maybe 5%, and that is just my guess. I'm not predicting anything here. So, but again, I will be basically looking for this all-time high to get tagged until otherwise. So that's the reason why I do not believe this is the beginning of the crash. It is another pullback, although we were looking for a pullback a little bit later, possibly at the middle of next week to begin, but apparently it came a week early. So we'll see. So thank you for watching, and be sure to smash that thumbs up to help me share and promote this video, and stay safe.